The biggest wealth building tool in history, owning a home, is slipping out of reach for millions. Shocking truth, it's not an accident. Two powerful institutions, Fannie Mae and Freddie Mac. They control half of all the mortgages in America. They back over $7 trillion in loans, and they decide who gets approved and what loans exist, and even how much homeownership costs you. But here's the problem. Since 2008, these institutions, they've been under government control, approving 30% fewer loans, making the mortgage process longer, slower, and more exclusive than ever. And now President Trump, he has a plan to set them free, to privatize. So if that happens, it could send shockwaves through the housing market. Home prices, loan approvals, and even the future of the 30-year mortgage, they all hang in the balance. So is this the fix that we need? Or are we walking into the next financial disaster? So we're going to break it down and stay to the end, where I show you exactly what you need to do to get a mortgage in today's market. So who exactly are the Fannie Mae and Freddie Mac? Well, they aren't the ones handing you the mortgage directly. You usually go through a mortgage company, something like that. But they're definitely the reason you can even get a loan. So picture this. You go to the bank or you go to a mortgage company, you apply for a mortgage, and they hand you the keys to your new home. But behind the scenes, what's happening? The bank doesn't just sit on your loan. They sell it to Fannie Mae or Freddie Mac, which gives them more cash to lend out to other buyers. That's how the whole system keeps running. Let me tell you more about these mind-blowing numbers I told you about. Fannie Mae and Freddie Mac, they back about $7 trillion in mortgage loans. That's roughly half of all the mortgages in America. And without them, the 30-year fixed rate that we all take for granted probably wouldn't even exist. Banks simply wouldn't want to take on that much long-term risk. Most people don't realize that Fannie Mae was actually created during the Great Depression. I don't know if you knew that, in 1938, as part of Roosevelt's New Deal to expand homeownership. And Freddie Mac, they came along later, like 1970, to create more competition. They literally shaped the American dream for generations. These two companies were once private, operating in the market, to make money, right? But when the 2008 crash hit, they were sitting on about $5.4 trillion in mortgage debt, and investors were fleeing. Government stepped in and took control. They invested about $191 billion to keep them afloat. The idea was that the takeover would be temporary. Yet here we are, almost 2 decades later, and they're still under government conservatorship. The problem? Well, become super slow and cautious because all the oversight. Their approval rates for loans have dropped by nearly 30%. President Trump's plan to release them actually happens. It could give them more freedom to move faster, approve more loans, and help a lot more people get homes. So let's talk about this plan. President Trump's plan to free Fannie and Freddie from government control. Basically, it's all about giving them more independence. And here's the truth. Right now, under government control, these companies are incredibly slow, overregulated, overcautious, and that means fewer people are getting approved for loans. See how that works? Let me break it down for you exactly, what's being proposed. So first, these entities, they would be recapitalized, build up their own financial reserves, about 100 and 125 billion combined, so they can withstand future housing downturns without taxpayer bailout. And second, they transition from government control back to being private companies with government oversight. A lot different, right? So you can think of it like taking the training wheels off, but still having safety helmets on, something like that. Third, and this is, I think, the more important one, they'd be allowed to innovate again. Right now, they're basically frozen in 2008 using outdated approval methods that don't reflect today's economy or the workforce. And here's a really shocking statistic that I read, that the average time for a mortgage application to closing has increased from 30 days before 2008 to over 50 days now. I just went through this with one of my clients. 50 days. That's unheard of. And also, don't forget those self-employed borrowers. That could take up to 75 to 90 days, right? So that's over 2 months of waiting, during which time another buyer with cash can swoop in and take the home. Think about first-time buyers who've been stuck renting for years. The process of getting a mortgage is so slow and bureaucratic that many of them give up, or they just can't compete with the crazy prices. Solution is, if Fannie and Freddie were free to operate more like a private company, they could act more quickly and get loans into people's hands a lot quicker. I spoke with our mortgage broker, Krista Lowry, last week, who told me she's had to turn away over 200 potential home buyers this year alone because they didn't fit into the Freddie and the Fannie's rigid approval boxes, despite having good income and payment history. Who are these people that aren't getting the loans? Typically teachers or I call them gig workers, small business owners, just regular people who should qualify but don't under the current system. So what about this housing crisis that no one's talking about? I mean, you hear it all over the internet that there's a housing crisis, affordability, no inventory, all that stuff. I think that the mainstream media is completely ignoring that we are in a housing crisis. I mean, really, homeownership rate in America has barely recovered since 2008. It's hovering around, say, 65%. When historically, it should be closer to 70%. What's happening boots on the ground? The average age of a first-time buyer has jumped from 29 in the 80s to 36 today. An entire generation is basically being left behind. Why? Because inventory is at record lows. We currently have just a 3.5 month supply of homes in the market nationwide. In Philadelphia and the burbs, geez, that's only like down to 2. It's really low here. Now, balanced market is when you have 6 months of supply. And the construction of new homes is still 40% below that we need to meet the demand. And this is where Freddie and Fannie come in. If they were freed up to approve more loans more quickly, we'd see a surge in demand that would actually stimulate new construction. Builders would have confidence that buyers would get financing so they can build more homes. It all starts there. It's basic economics, right? Increased demand and supply will follow. Supply and demand. Let me tell you a story about a friend of mine, one of our clients. Gosh, she's been trying to buy a home, I think, for like 3 years. She makes great money. It's a freelancer, but because her income isn't traditional, Fannie and Freddie rigid guidelines, means she can't get approved even though she's never missed a rent payment in 10 years. This is the reality for millions of Americans, not just her. In today's, I call it the gig economy. Now, the current system is literally designed for a workforce that doesn't exist anymore, which is the 9-to-5 employee with 30 years at the same company. That was the way it always was. That's the way I started. Now, today, about 36% of workers participate in what's called the gig economy in some form. That's over 1/3 of the workforce. I feel like they're being underserved by the current mortgage system. So do we have an equity gap here? Does anybody get left behind? Yeah, since the 2008 crash, Fannie Mae and Freddie Mac actually approved twice as many mortgages for Black borrowers than they do now. In fact, they were a lifeline for minority home buyers, helping people who would otherwise be shut out of the market. But if you look at the data, the cold, hard data, the homeownership gap between white and Black Americans is actually wider than it was in the 1960s before the Fair Housing Act. So white homeownership is around 74%, while Black homeownership is just 44%. It's like a 30-point gap. And for Hispanic Americans, the rate is about 49%. Now, this isn't just a statistic, it's a wealth gap. It basically perpetuates inequality for generations. And since the government took control, the situation has changed, and lower income and minority families are finding it very hard to get approved for loans, even though the government claims to prioritize equity. In fact, the mortgage denial rates for Black applicants are 80% higher than for white applicants with similar financial profiles. I think this is a big deal because homeownership is the main way people buy generational wealth. Now, the median net worth of a homeowner is about $255,000 compared to just $6,300 for renters. That's a 40x difference. So by freeing Fannie and Freddie, we could see more lending to communities that have been left out, I think, for way too long. I spoke to a housing advocate friend of mine in Chicago who basically, she told me something that really stuck with me, that the current system feels like it's designed to keep certain communities renting forever. That's harsh, but when you look at the numbers, you start to wonder if she's right. Now, if these institutions were given the freedom, make decisions based upon today's realities, we could see them go back to the roots of serving these communities and not just following the government's slow pace, because we could be here forever. And that could be huge for closing the wealth gap in America. So what do you think? Put some comments down below. Love to hear your comments. Now let's talk about innovation. What could change? So the current mortgage approval process, I feel, is like using a flip phone in the age of iPhones. It's outdated, inefficient, right? So what are some of the innovations that Fannie and Freddie could implement? I think first, they could start considering rental payment history in mortgage approvals. Very important. Think about it. If you paid $1,800 a month in rent on time, every month for years, why shouldn't that count towards proving you can buy a home and pay a $1,500 mortgage? Second, they could develop new products. Get out of your box. Develop new products for sort of self-employed in these gig workers. So right now, if you drive for Uber or you freelance as a designer, you need 2 years of tax returns to qualify. What if they could look at your consistent income streams through banking data instead? That's a possibility. Third, they could streamline the approval process using AI and automation. The technology exists to verify employment, assets, and creditworthiness in minutes. It doesn't take weeks. And that could cut the approval time from 50 plus days to potentially under a week. Imagine that. Woo, that would be awesome. Fourth, they could create specialized programs for first-time buyers. And they kind of have that now with the grant programs, but there's only a few people that can qualify. They don't have a ton of money in that. These grant programs, they require less money down. And they have these built-in safeguards like mandatory financial education. They do that now, have the grant programs, but there's not unlimited amount of money in these programs. And I know the grant programs are starting to take registrations. They always do February and March and April in those months. So make sure you get your name on the grant list. So can these innovations work? Yeah, well, they're not theoretical. I mean, they're already happening in the private lending market, but at a higher interest rate because those loans can't be sold to Freddie and Fannie. Freddie and Fannie were freed up. Those innovations could, I think, become more mainstream and affordable. So are there any risks? People say, are there any risks? So Freddie and Freddie, if they're free without enough oversight, we could see a repeat of 2008 crash. They were giving mortgages to about anybody. And that's a really scary thought. Reckless lending, risky loans, and another financial disaster. I know I don't want that again. The 2008 crisis, it just cost Americans about $10 trillion in wealth and millions lost in their homes. We just can't afford to repeat these mistakes. Here's the thing, it doesn't have to go that way. We're not in 2008 anymore. We have better technology, better data, and hopefully we've learned some lessons. For one thing I can remember, one of the biggest problems in 2008 was the no-doc loans or stated income loans. Basically, people could just say what they earned without proving it. Well, those are gone now. They should stay gone, I think. But for some people who have high credit scores and show they have paid their payments, it could be good for them. We could modernize how mortgages are approved. Smart reform could make things better, definitely not worse. For example, considering rental history and credit assessments, like I talked about before, that could open up opportunities for people who have a solid history of paying rent but not have a high credit score. That's just one way to make the system more fair without letting things get out of control. I think smart reforms are good. It could give us more access to homeownership while keeping the system stable. It's all about balancing freedom and safety, right? If done right, we could avoid repeating the mistakes of the past and basically move toward, I would say, a more inclusive future. And if you're finding this analysis helpful, please just hit that like button, subscribe. It really helps my channel. I want to hear what you really think about giving Fannie and Freddie more freedom to help more people. And I know many of you are thinking, how is this going to impact the market? What does it mean for, say, home prices? Well, it's a little more complicated, but I can kind of break it down a little bit for you here. So in the short term, I think we're still going to see prices rise in some markets. I know in our market here in Philly, the burbs, buyers are out there. And as more buyers enter with newly approved mortgages, the supply and demand thing is going to happen. We're going to have a ton of demand, no supply. But I would say it's more for example, existing homes. But I think if you increase demand, I think it'll stimulate more construction, which would eventually increase supply and then stabilize prices. This is not an overnight fix, guys. The National Association of Home Builders, my father and brother were part of that. And we're currently building right now about 1.4 million homes a year. It needs to be closer to 2 million to meet the demand. Okay, so we need about 0.6 million more homes. That's what we need to be doing. Now, as far as a regional breakdown, in the high cost like coastal markets, California, New York, prices might actually stabilize faster because builders would have more incentive to create higher density housing. But I think in the Midwest and South, where land is more available, you could see a construction boom. And I've been hearing that over and over again. Lots of articles on that. And that's going to keep prices affordable while they're expanding the inventory. It's going to take some time again. And if you currently own a home, I think your equity is definitely going to grow, but it's not going to grow like this crazy 20% jumps that we saw. I think between 3 and 5% annually. I think in our area, it's going up about 6 or 7 right now in Philadelphia and the burb. And if you're a buyer right now and you're thinking about buying, don't panic about being priced out. If the plan works as intended, it could actually create more opportunities for you, especially in the starter home category. That's been really non-extinct in recent years. So as I promised, I'm going to tell you what this means to you and what I would do if I were you if you're looking to buy a home right now or get a mortgage. If you're a renter and you want to buy, it's going to be huge for you. You're going to have more flexible approval guidelines, finally qualify for a mortgage, especially if you have good income, but don't fit the traditional buyer profile. And that's the most important thing I think that's going to help out. If you're a current homeowner, you might see more equity growth. And when you decide to sell, you could have a larger pool of qualified buyers, meaning less time on the market. Right? And maybe you're an investor. If you're an investor, I just really pay attention. It's going to create a bunch of new opportunities in markets that have been underserved and a lot more opportunities for you. For example, areas with, say, high rental populations could see waves of first-time buyers entering the market. So if you're in the construction industry, I'd prepare for potential growth. Let's get out there and build some houses, because more mortgage approvals mean more demand for new housing. And I'd say don't worry about another 2008. The key difference here is that we're talking about responsible innovation, not reckless abandon. So the goal right now is update this outdated system without throwing away all the rules. Now, I've been analyzing housing markets for years. I believe that we're really at a pivotal moment right now, really right now. The decision made about Fannie and Freddie in the next few years could literally determine whether homeownership becomes accessible again for millions of Americans. If you're thinking of buying right now and you're a first-time buyer, get on that grant program. Don't overbuy. Just if you get into a house that you love and you want to buy it, do not buy a home if you can't financially afford it and want to play the game. Like if you want to buy a house and build it in the burbs, you're going to pay more than what's asking, and you're going to be in the competition. You just need to be able to stomach the process. It doesn't have to be like that. When we take our buyers through, they're not stressed out at all, because we go through a certain process and we explain everything that could happen during the process. So if you're thinking about buying a home and you're in a different area, you're not in Philly in the burbs, you can call me if you are in this area. I can introduce you to a realtor in your area who can take you through the process and make sure that they are your guide by your side and not trying to just make you buy a house and gain a commission check, because that's what most realtors are in it for. So is this the right move? I believe it is. Release them. Release Fannie and Freddie. Get them out. Get privatized. It's going to create plenty of opportunities for home buyers, okay? People who've been left out of the market for a bunch of years now. Now, this is not a partisan issue, guys. It's about modernizing a system that was designed for a world that no longer exists. So whether you love or you hate President Trump, this particular plan has elements that could benefit millions of Americans who just want a fair shot at homeownership. The key is going to be in the details. How much capital these entities must hold, what kind of oversight remains in place, and whether they're truly allowed to innovate in a responsible way. My hope is that whoever is implementing these changes, they just focus on the people who need homes, not just the Wall Street interests that want to profit from the system. Now you can see how complicated this whole thing and critical that we deal with Freddie and Fannie right now. And because mortgage is really, they're only one piece of the puzzle. The real question is, what does all this mean? When does it come to actually buying and selling a home in today's market? Because right now there is a hidden side to real estate that no one really talks about. It's behind the scenes truths that can make or break your next move. So whether you're looking to buy your first home or sell at the right time, or just really want to avoid costly mistakes, you need to understand what's really happening in the market. And that's why I highly, highly, highly recommend that you check out my next video, The Truth About Buying and Selling, that no one tells you. Trust me, this is the kind of insight that can save you thousands and help you make smarter decisions. Click here to watch it now.